US Treasury Secretary Scott Bessent has recently made waves with some major comments on the state of the American economy and how it's going to impact the markets moving forward. That's exactly what we're breaking down today. There's been a whirlwind of opinions from all ends of the political spectrum, and with trillions pouring into the US, crypto booming like never before, and other major shifts underway, there's a lot at stake. All of these factors are shaping the future of XRP, and we're going to connect the dots in this video. Let's kick things off with Bessent's latest interview. He made a bold claim: the US is set to grow its GDP at a faster rate than its debt. That's a big statement, especially when you consider the country's staggering debt levels over the past few decades. For 20 to 30 years, debt has grown far more rapidly than GDP, so hearing that this trend might finally reverse is a game changer. Let me play a short clip from that interview. Listen closely. Bessent explained that while debt growth is a concern, what truly matters is economic expansion. Looking back over the past 4 years, he said he inherited a deficit equal to 6.7% of GDP, one of the highest deficits ever recorded outside of wartime or economic collapse. The goal now: cut excessive spending and increase revenue. The plan is simple in theory, but powerful: boost the economy enough so that it outpaces debt accumulation. That, according to both Bessent and former Secretary Yellen, is the key metric to watch: debt to GDP. Think about it this way: just like a business, if you're borrowing more than you're earning, you're heading toward disaster. The fact that the US government has been running on a deficit for so long without facing serious consequences is honestly shocking. It's the taxpayers who feel the pinch. They're the ones funding this system, and when the government doesn't handle money responsibly, even when we're not in a recession or a major global war, it raises serious questions. So what's behind all this? A mix of unchecked spending and, in some cases, straight-up corruption. We've already seen evidence of mismanagement in agencies like USAID and other bodies caught in fraudulent activities. It's clear that accountability has been lacking. Now the bold move, possibly the only viable path forward, is to drive up GDP. That means boosting national income through smart investments, not just slashing budgets blindly. Invest in industries that have real growth potential. Cut the fat where needed. If you want to fix the problem, make sure the country earns more than it owes. That does seem like the right direction to head in. But Treasury Secretary Bessent didn't stop there. He shared quite a bit more about international deals currently in play, and which of those could actually give the US economy a serious boost. I'll let you hear the clip in a moment, and then we'll break it down together. It definitely needs a little context, so pay close attention. According to Bessent, countries like Qatar, Saudi Arabia, and the UAE aren't holding back. They're pouring money into long-term investments. We're talking about 10-year commitments, massive financial backing, and serious trade deals. These aren't just symbolic partnerships. They're the kind of strategic alliances that could fuel real, lasting economic growth for the United States. And that's the big picture here. Global investment, particularly from regions like the Middle East, China, and Europe, is starting to flow into crucial US sectors. Think artificial intelligence, energy, especially oil and gas, and yes, even cryptocurrency. These are the engines of the future economy. When money flows into these high-growth industries, the entire GDP benefits, and when GDP climbs, tech stocks and innovative sectors tend to surge right along with it. Just imagine what happens when trillions of dollars are injected into the economy from all over the globe. The impact could be massive. On the AI front alone, we're looking at a future where productivity skyrockets. Automation will unlock new levels of efficiency, helping businesses do more, make more, and scale faster than ever before. We're entering an era where American companies might not need to ship production overseas anymore. Factories could be built right here at home, and the kicker: they could be fully automated. Instead of needing full shifts of workers, we'd have technicians overseeing systems, maintaining robots, and fine-tuning processes. The entire production model could be redefined. Of course, whenever people hear about AI and automation, there's a wave of concern, and it's not unwarranted. Yes, some jobs will be lost. Yes, disruption is coming, but that's part of the evolution. Every wave of innovation brings change, and this one is no different. What matters is how we adapt and prepare for what's next. At the same time, we've seen a noticeable drop in the number of retail investors who are feeling bearish about the market. That figure has fallen by 15 percentage points, effectively bringing an end to a historic run, 11 straight weeks where over half of investors expected the market to decline. So clearly there's been a shift in overall sentiment and it's pointing in a more optimistic direction. Now in the short term, it's no secret, we've been riding a wave of greed in the market. Bitcoin recently smashed past the $100,000 mark, creating tons of buzz. XRP has also enjoyed a solid rally, now hovering around $2.40. And let's not forget, applications for XRP ETFs are starting to roll in. Investors are feeling confident, maybe even a bit overconfident, which is something to keep in mind. When people get too bullish, markets tend to throw surprises. That said, let's take a moment to dive into some technical analysis, especially for XRP, because the chart is getting very interesting. Personally, I've been buying consistently on the red days, picked up more at $2.30 just yesterday. Today we're seeing a nice little bounce, up about 3%, so the position is in the green. This is part of a larger strategy, where I've combined trades into a single 5x leveraged long position on XRP. I've also got more buy orders waiting below, ready to trigger if we dip again. If you're curious to track those trades, you can always check out Crypto Crusaders. Now here's something important I want to highlight, the daily chart on XRP. Recently the stochastic RSI has been heading downward, but we've just reached a convergence point between the blue and orange lines. This is usually a strong indicator that a trend reversal could be on the horizon. If today's green candle holds, we could be shifting from oversold back toward overbought territory. That would be a bullish sign. We've had some recent sell-offs, $1.27, $6.48, and a few other down days, but that's not the whole story. There's one more critical element to watch: support and resistance levels. Right now XRP is heading straight for a key resistance line at $2.46. This is where things get tricky. Last time we hit this resistance zone, the price was quickly met with heavy selling, and big red candles followed. So while it's exciting to see upward momentum, we've got to be cautious. This level has proven to be a rejection point before, and it could happen again. Just like when the internet first took off, this new wave of innovation will actually create more jobs than it replaces. The difference now is that instead of doing repetitive tasks, people will be working alongside AI, giving it instructions, fine-tuning it, and making sure it performs efficiently. Think about it, roles that once focused on customer service could now shift toward managing and directing AI systems. Whether it's inputting prompts, adjusting settings, or building workflows, these new roles won't require complex coding. They'll be more about communication and problem solving, just like how you might interact with ChatGPT or Grok today. This shift opens doors for businesses of all sizes, small startups to big corporations, to grow rapidly. When AI is used the right way, it becomes a powerful tool that can boost productivity and help companies scale without massive overheads. And honestly, if you embrace this technology rather than fear it, you're positioning yourself for major success in the next 5 to 10 years. Now let's talk crypto, because it's going to play a massive role in this evolving economy.